Should all expect. It's good to have you back. I appreciate you being with us. You dropped a story today that said, in part, and I'm quoting here, central bankers worry that the recent surge in inflation may represent not a temporary phenomenon, but a transition to a new lasting reality. There were actually some people who suggested that yields moved a tick higher on your story today. How much do you think the Fed really believes that? And may that then lead to a more hawkish surprise from the chairman in the next couple of days?
Well, Scott, thanks for having me. I don't know what the chair is going to talk about on Friday, but if you go back and you look at his speech from 1 year ago, it was a virtual symposium last year. That speech has aged very poorly. He knows it. We all know it. He went all in that speech last year on transitory inflation. Chair Powell listed 5 reasons why it looked at the time like inflation would be transitory. Now, he did say this is a dashboard. The Fed would want to check against those 5 indicators. So I think this speech is an opportunity perhaps to revisit those 5 indicators. And if you do look at them, inflation expectations, wages, the breadth of price pressures, the temporary nature of certain high price pressures, and then the forces of globalization and demographics, those have all broken against the Fed's outlook in really an unhelpful direction over the past year. And so that could be a starting point for the discussion on Friday.
So Goldman's Jan Hatzius wrote yesterday, quote, "We expect Powell to reiterate the case for slowing the pace of tightening laid out at the press conference and the minutes released last week. We continue to expect the FOMC to slow the pace of rate hikes to 50 basis points in September and 25 in November and December." Is that what you expect? I mean, what are your own expectations on what's going to happen on Friday?
I would be surprised if we got too much of a steer about the next meeting in the speech. I mean, anything is possible, but this doesn't seem like the forum for providing sort of spot guidance for the next meeting. It's a bigger stage than that. It's a stage to lay out sort of the grand strategy for the next 6 or 12 or even 18 months. And so, yes, I mean, Jan is right. It is true. If you look at the July press conference and the FOMC minutes that came out last week, clearly there's a desire by some on the committee to get off of 75 basis points being the norm at every meeting. They don't want to over-tighten. Powell said that at the last press conference. But there's also a recognition that if financial conditions ease, then the hill becomes steeper for the Fed to climb, that they will have more work to do. So it will be a difficult balancing act. And I would agree that, Powell won't want to take anything off the table in this speech, but it feels like an opportunity to do something broader than just provide guidance for what they're going to do in 3 or 4 weeks.
You're always in the room of the press conference, as is our own Steve Leisman. You guys ask the questions, and the Fed chair gives his answers as honestly and hopefully as clearly as he can. I'm curious in your reaction to how the market reacted to what Chair Powell said at the press conference. We got a big rally on this notion that they were at the so-called beginning of the end of these rate hikes. Do you personally think that the market got it wrong based on what you heard and what your own reporting has suggested since?
I don't know. I mean, I don't get paid to follow what the market is going to do here or there. Was it a little bit of a surprise? Sure. But you've seen a lot of that fade away over the past week here. I think the bigger question really is, what's going to happen to inflation? The market seems to be fairly optimistic about inflation and the soft landing story. A lot of economists are not. And so that's, I think, where the challenge comes in. What is the Fed going to do when, the economy is actually slowing, when you see job growth slowing a lot, which it definitely did not in July, and if inflation's still high, if inflation comes down from 8% and 7% down to the mid-4s, that's still double their target. So what happens there? I don't think we know. We've spent a lot of time understanding what the Fed's reaction function was for a low growth, low inflation world. But they don't know what they're going to do in this situation because they haven't faced anything like this in a long time. This will be the first Jackson Hole event. It began in 1982, and it's the first one where they're dealing with inflation continuing to run away from their target. They didn't have a defined target back then. It's also, it's the first in-person gathering in 3 years, and that I think creates an opportunity for side, hallway conversations, time at the bar. Other central bankers can get together and talk face to face about some of these problems, which you just can't do over Zoom.
Yeah, more reporting, you mean, for guys like you and our own Leisman and everybody else who's going to be there covering it. I appreciate your time so very much. Nick Timmer of the Wall Street Journal.